Here to talk about it, our economic panel, Brandon Arnold is the Executive Vice President at the National Taxpayers Union. Also with us, Anthony Esposito, CEO and founder of Ascalon 6 Capital. Welcome, gentlemen. So, Anthony, I'm going to start with you here. Maxine Waters, maybe her time should expire, given the fact that she's been in Congress for forever. I actually forgot she's still in Congress right now. And that exchange with Scott Bessent, certainly a fiery one. Your reaction?
Well, first of all, I wish that Ms. Waters' time was officially expired. Her term should never have started, to be perfectly honest with you. Look, Secretary Bessent is doing all the right things. And the bottom line is he's executing and thinking at a level 10, and Maxine Waters is struggling to get above 1. And that is really me being kind. We are moving this economy in the right direction. We're moving fiscal and monetary policy in the right direction. There is a lot of cleanup that needs to happen. And telling the Secretary of the Treasury to shut up in a hearing is absolutely unacceptable. They have nothing more to say except insult, lie, and gaslight. And this was just a prime example of that.
Yeah, it's definitely questionable decorum coming from someone who actually has quite a long tenure in Congress. Didn't expect that from her. I've heard a lot of crazy things from Maxine Waters, but what's your reaction, Brandon?
Yeah, I mean, Maxine Waters, I think it's time for her to hang it up. There's nothing wrong with heading back to Los Angeles and spending time with your family. She's presided over some of the worst laws that we've seen coming out of Congress. Her attempts to regulate the banking industry, to essentially shut off lending, access to credit for low-income Americans is absolutely abysmal. It's time to hang it up, Maxine. You've spent plenty of time in Washington. There's nothing wrong with spending more time with your family.
Well, in other economic news from the Hill, a political firestorm is growing over President Trump's pick to lead the Federal Reserve. Leading the war and leading the party, Senator Elizabeth Warren is publicly warning the nomination of Kevin Warsh could threaten the central bank's independence. The Massachusetts senator saying Warsh is, quote, so much more dangerous than other nominees. Anthony, what's your take? Because that's an interesting perspective.
The first point is the ability of the president to have an opinion and voice that opinion is not a lack of independence on the part of the Fed. The president's allowed to say what he thinks and appoint somebody that he thinks is going to be in line with what policy could be. I think Warsh is coming to do the right things. It's not going to be easy. And what he does is not going to be a quick cleanup. Whether or not he cuts rates, he may cut rates a little bit. I think he's more focused on the balance sheet, which gets a little more technical into how do we add liquidity to the market and bring rates down, but not focus solely on that Fed funds. So he has a job in front of him. Remember, there are 12 voting members at the Fed. He's not the king. He is the chair of the Fed, but there are 12 votes that have to come in, whether we cut rates or raise rates and how we manage that balance sheet. I think there's a lot to be done here. I think Elizabeth Warren would do well in buying an Economics 101 textbook, reading that, being quiet a little bit, and then come back with an opinion, maybe.
You know, Brandon, I have a different take here. Many people say that, you know what, the president shouldn't say anything or other people shouldn't attack the Fed. I don't see it as an attack. I see it as voicing a different opinion. That's America. That's America. That is American. Whether we talk about the political system, whether we talk about the Fed, who's independent, showing a discourse, showing a difference of opinion, that actually, in my opinion, makes a clear picture that if the Fed does something different, that they are independent. What say you?
Yeah, I think that's right. I think the problem that we're seeing on the Hill right now is, of course, we're going to get opposition from somebody like Elizabeth Warren. In fact, when you get opposition from Elizabeth Warren, that suggests that you probably made a pretty good pick. But the question right now is getting all the Republicans on board, and that really rests on resolving some of the legal issues surrounding Jerome Powell, right now the existing Fed chair, of course. So once those are resolved, and I think they will, I think Senator Tillis is coming around. We've seen positive remarks from Chairman Tim Scott. So I think there will be Republican unity behind Kevin Warsh eventually. We're not quite there yet, but the reaction that we get from Elizabeth Warren is absolutely predictable. She certainly needs to revise her economic history and her economic know-how because she's been wrong on so many counts. It's just hard to count.
Well, new economic data is showing inflation is not cooling as much as expected. Core inflation measures, the ones the Fed watches most closely, are starting to edge higher. That trend is putting pressure on policymakers to slow down or reconsider interest rate cuts, and markets are paying attention. Anthony, should Americans be worried about inflation right now?
I think if you look at the annualized numbers, core inflation, CPI, PPI, those numbers are actually steady and have come down significantly. If you look at some of the work away from the BLS and the government institutions, you look at like a true inflation number, the inflation numbers are actually dropping well below 2% at this point. So is inflation a concern? It's definitely a concern. But I don't think it's as much a concern at this point as it might appear when we look at those government CPI, PPI, and core inflation numbers.
Brendan, what's your take in terms of inflation going forward? Because if we continue as a nation to increase the national debt, that is only going to further drive inflation in the future. So can you talk to our viewers about the national debt, the spending habit in Washington, and all of these other factors that influence the economy?
Yeah, absolutely. I mean, if policymakers are trying to address the affordability crisis, which I really think we need to talk about affordability more holistically, it's not just inflation, it's inflation against wages. If wages are stagnating, which is kind of where we are now, the wage growth is increases have started to subside. That's when people get antsy. They're not making as much money. Prices haven't subsided the way that we would like. But if you're trying to fix this problem, if you're trying to fix the affordability problem on Capitol Hill, the biggest thing that they can do is balance the federal budget. We cannot continue to have $2 trillion annual deficits. We cannot continue to finance the federal debt at $1.2 trillion a year. That's 13% of spending, just paying off the interest on our credit card bill. Fixing that problem will absolutely help to lower interest rates, lower mortgage rates. It'll create a much healthier economy across the board, and it should be priority number one for this Congress and president.
Real quick, we only have about 30 seconds. Anthony, we're in the throes of earnings season. What are you looking at?
Well, we're starting to see some real concern with the CapEx spend on AI. We're starting to see some real weakness in the software section. We have the IGV down. I think we're down about 30% here. We've had some massive days. We're down 4% just in software yesterday. So the earnings season is not, we're not hitting the mark because we are way overvalued, and we're starting to see some of the air come out of the balloon. We're only down about 2% from the all-time high in the S&P. Feels like we're down about 20%. Somebody said that to me yesterday. We have a little bit more to go here to the downside.
You know, Brandon, many people are actually betting on technology, AI investments and so forth to drive the economy. So to Anthony's point, if that is slowing down, where do we make up the growth?
Yeah, I mean, we make it up through investing in American infrastructure, through our manufacturing sector, a revised agriculture sector. I think there's a lot of potential here that gets spurred by the tax bill that was passed here, the Working Families Tax Cut bill, that incentivized research and development expenditures on United States soil, capital expenditures on United States soil, but providing full expensibility, essentially full tax deductibility. Those policies have begun to kick in, but I don't think we've really taken it up to the high gear yet that we can. Once those policies fully take hold, I do think we're going to see more investment. That's going to drive growth, whether that's in AI or whether that's in more traditional parts of the economy.
Okay, well, we'll be tracking it, as you will. Thanks so much, Brandon and Anthony. We appreciate your commentary.
Thanks, guys.
Thank you.
Thank you.